Hey guys, hope everybody's well. It's about 3:30 Pacific time on January 5th. Today's Friday. Hope all you guys are doing well. Markets for the week. First for the day, all three of the indices doing okay, but not by a significant amount. The S&P 500 up about 1/10 of 1%, NASDAQ about the same, 1/10 of 1%, and then the Dow Jones up about 3/10 of a percent. So really, really small end to the gains to the end of the week. But for the week, if you look at it overall, the Nasdaq was down close to about 4%. The S&P 500 down close to about 2%, and the Dow Jones Industrial Average down little less than 1%. So still, after the 8-week move up, this is a very good start, actually. I think it's not one of those places where the markets are giving up. The bulls are not giving up very easily. So there seems to be quite a bit of resistance to want to give up the gains that we've gained. But no, the gains were significant. So I think that's a good sign that we're still in a healthy kind of a market. From a sector performance perspective, there's a little bit of rebalancing. Some people call it rotation rebalancing that's happening. Technology, which was the number one gainer for last year, was the number one loser for this week. It's still early, but technology stocks lost about 4.5% this week. The biggest gainer, on the other hand, was healthcare, utilities, and energy and financial. So those are the ones that I mentioned in my Twitter feed over the last couple of days. They seem to be gaining, but this is just short term, 1 week. Still too early to be able to call it a done or move forward. But one of the stocks that showed up on the screeners for me and scanners is Lowe's. Most of you guys know about Lowe's, so I'm not going to go through a lot of detail about the company. Lowe's essentially is big box retailer for home improvement and home decor stores. They have a lot of stores. They've had some very, very good earnings over the years and been a consistent performer. But given that after COVID, during COVID, most of you guys know this, the home improvement market just took off. Home Depot and Lowe's just did phenomenally well. Look at this. During the 5-year period, just to give you a little bit of context, this was the low of March 2020 before the COVID thing. And then just from roughly about $31 at the peak, it went to nearly $70. So doubled in less than a year. This was just, or a little over a year. This was a phenomenal run. And then did a little bit of a pullback, but still has been very consistent performer. I like Lowe's overall. So let's go through a 5-step process, see what we like, see what we don't like. Why did it show up on the radar? We start with the financials first. As always, we start from an annualized income statement standpoint. Okay, so company was doing about $13 billion in 2016, and income statements, yeah, okay, doing about 14. So this is not growing too fast. Over the years, it's gone from single digit 4%, 6% growth, and then negative 7% growth during 2020. This is because of COVID. And then last year as well, again, the COVID growth was decent. That's probably the best of the growth so far, 2021. And then just absolutely tanked. Hasn't done too well. So this is not very comforting. It's literally flat, right? Um, Operating income, they seem to do roughly about $1 billion in profit per year. It's about 1/14 of a percent. So that's not great, not good either. And on a quarterly basis, okay, so this is why it's showing up. From negative growth last year, they seem to be turning a corner and getting to double-digit growth. So this is very, very good. So roughly about 3 point almost $4 billion in revenue Q3 of 2020. Earnings now coming up in 30 days. So the next earnings is probably February, the first week of February, and then decent net income as well, which net income has been growing much faster. Look, it's almost 100% growth, although revenue has been growing at 13-15%. So they're getting more optimized. That's what it tells me. That's a good sign. So they're getting better optimized. Year of efficiency is not just for Meta and for Google. It seems to be even for Lowe's and everybody else. So that's a good sign. That's one of the reasons why it's showing up. Good, strong, double-digit growth compared to usual. $77 billion, $9 billion cash. Okay, this is reasonable. Not to worry, not something to worry about too much. And then if you look at it overall, cash from operations about $1 billion. They've got $1 billion in free cash flow. Not something to worry about. This is a strong balance sheet company. Valuations. Okay, so one-time sales, again, probably because the gross margins are not very, very high. Price to earnings of 12 for 13% revenue growth and nearly 100% EPS growth compared to where they were before. So net margin is in the 6% range, operating margin in the 10%. So the gross margins, just to give you a little bit of context, the reason why it doesn't show up on this particular case is probably because it either goes up and down or because this is a retailer with about 30% gross margins. Most of the products they sell are probably from third parties. They probably make 30% or even less. I wouldn't be surprised if they're 20% gross margin business. But overall, $50 billion for a $4 billion revenue run rate, or 50 billion, 4 billion on the quarter. So 15, 16 billion. It's about 1 times price to sales, 12 times price to earnings. Earnings are growing much, much faster. So that's a good sign, right? I like it. So on a scale of 1 to 10, again, what do we give the fundamentals in this case? I'd probably give it a 7, 6 or a 7 actually. It's a slow growth company. Don't expect the stock to really take off very quickly, but it's going to do well based on my scanning, and I've found it to be consistently good. So what does a long-term monthly chart look like? So this was a stage 1, very strong growth, stage 2, stage 3, stage 4 markdown, and then again mark up, consolidation, mark up, mark down, so on and so forth. And right now, on the very long-term basis, is actually, if you look at it, higher highs, higher lows seems to be happening here. So this is a stage 2 markup phase on the very highest level. And it's broken through a bunch of all-time highs, actually. 68 was the all-time high, so it's just broken through that range. That's probably a reason why it's also showing up on the scanner. Okay, so now that you know that 68 is the all-time high that it hit before, this would probably be a very good point for you to say that might be, maybe that is a stop loss, or maybe at least a point to enter. So 68, somewhere around there might be a good point to enter, with the stop loss being on the 20-day moving average, somewhere in the 66 zone, but we'll get to that in a little bit. Okay, what does the support look like? The support seems to me in a couple of different cases, this previous resistance usually becomes support. So this might be a good point of support for it, but it still needs a little bit of room. So this is something that could go down a little bit to the 68.30 time frame, but this looks like it wants to go up. So this is you might want to adjust it a little bit. Let me adjust it down just to show you guys what that might look like. So let's say we put another resistance here. I'm just going to move the resistance a little bit to make sure that it gives me a little bit of room. So 67 is a good support point, where if I want to be able to, of course, the stop loss will be the 66.40, which is the 66.33, sorry, which is the 20-day simple moving average on the weekly. But let's go to the daily chart. Okay, so this is very, very interesting. This is not yet, but very nice base. Not a great base, but good enough base to be able to get interested in. It's a nice, beautiful base that it's formed on the daily chart. Let's see if that is something that is very nicely visible on the weekly chart. Not as much, but it's still within the channel, still growing consistently within the channel. It's broken through the previous resistance at 68. So that's a good sign, and it's built a nice base overall. I think I like this base that it's built. If it forms a cup and a handle pattern, which it might go down a little bit and hit the 60, 66, 67 on the 20-day moving average. Yeah, 69, this might be a good move. Forms a cup. This is the cup. This is the handle. You got to wait for this. This is going up. Lowe's is going up. I know that because you look at the RSI, it's still not hit it. All the moving averages are up and to the right, so that's a good sign. The RSI has still not hit the extremely overbought situation. Consistent set of very nice moves up, and not a lot of resistance for it going forward. Good support. I think it might have a couple of touches here at the 67 range, and the MACD is still in the right direction. I like this a lot. I like Lowe's quite a bit. If you want to trade this, the best thing would be to be able to see for it to move, buy it somewhere in this range, 69.40 range, with a stop loss on the 50, which is 68.12, and then expect it to move up to the 70, 75 zone, maybe a little bit higher as well, 75 zone, nearly about 7 to 10% in roughly about a week or two. Earnings is coming up in 31 days. So 2 weeks, 75, this should be easy to get to 75 in 2 weeks. At least that's my expectation, given how well the market has been doing on the Dow Jones side versus on the NASDAQ side. So I like Lowe's. Take a look at it. Let me know in your comments if you're going to be following it. Have a great weekend, everybody. I'll talk to you guys soon.